Okay, let's unpack this because, well, you've probably seen the headlines lately about silver prices.
Yeah, they've certainly been getting attention.
They've surged past $35 an ounce. We're talking multi-year highs, maybe even, what, over 13-year highs, according to some reports.
That's right. It's significant movement.
And it feels like it's not just about jewelry anymore. Something bigger, more fundamental is happening in this market.
There really is. I mean, when you see that kind of price action in a major commodity, it signals some really pressure.
Pressure between supply and demand.
Exactly. Those forces are clearly quite tight right now. It definitely warrants a closer look.
And that's exactly what we're aiming for today. We've gone through that stack of articles and reports you shared, from places like the Silver Institute, SMM, Kitco, AGBI.
A good cross-section of sources.
Right. And our mission here is really to distill the key takeaways. We want to understand what's truly driving this big price move lately.
Focusing particularly on silver's role in industry and, of course, the supply situation.
And the reason this deep dive matters to you, listening, is that it really goes beyond just market news or investing.
Yeah, silver is this critical, often kind of hidden component in so much of the tech that shapes your daily life.
Like what specifically?
Well, think about solar panels powering homes, the electronics packed into your car, your phone, even the hardware that powers AI. Silver's in there.
Got it. So understanding its market gives you a shortcut, really, to seeing how interconnected things like, well, energy, technology, global economics,
Yeah.
how they all weave together.
Precisely. It connects a lot of important threads.
Okay, so where do we start? The sources, they seem to emphasize a kind of shift in silver's identity.
They really do. Traditionally, I think many people still think of silver mainly as a precious metal, right?
Yeah.
Often kind of in gold's shadow.
Sure, the monetary aspect, jewelry.
But the reports we looked at are very clear. There's been a fundamental change, an evolution.
And that change is its role as an industrial metal becoming much more important.
Absolutely dominant, even. The data indicates industrial demand now makes up, well, somewhere around 50% to maybe even 60% of global silver usage in 2024.
Wow, over half.
Yeah. And critically, the sources consistently point to this industrial strength, not so much its precious metal status, as the main engine for expected future price gains.
That's a huge distinction. So if industry is using the majority, we need to look at which industries are driving that. This is where it gets really interesting, right?
It does. And perhaps unsurprisingly, given the global energy transition, solar power photovoltaics, or PV, is highlighted again and again.
Across all the sources.
Yes, as the single largest sector really pushing silver demand growth right now.
The scale mentioned is just massive. Global PV capacity potentially tripling between now and 2030.
That's the projection. And silver is just essential for making solar cells work efficiently.
How so?
It's used in specialized silver powder and paste. These form the conductive grid lines on the cells that collect the electricity. The quality of that silver, its shape, size, how it disperses, is vital for the cell's performance.
And the demand numbers reflect that. I saw figures like 197.6 million ounces used in PV in 2024.
Yeah, and another source puts solar-related demand even higher, maybe over 7,000 tons by 2024.
What's really striking, though, is how fast solar's share of total silver demand has grown.
It's incredible, from just 6% back in 2015.
Only 6%.
Yeah, to over 19% in 2024. And it's projected to possibly exceed 30% by 2030. That's a very steep growth curve.
Now, I saw something about newer solar technologies potentially using more silver per panel. Is that right?
Yes, that's a factor too. Some newer high-efficiency cell designs, like Top Pecan or HJT, can actually consume more silver per unit, maybe 20% to even under 20% more compared to older PERC cells.
Okay, but wait, I also read about manufacturers trying to use less silver, something called thrifting.
You're absolutely right. That's the counter trend happening simultaneously. PV companies are getting very good at thrifting.
Which just means using less silver per panel.
Exactly. They're finding ways, through better electrode designs and printing techniques, to reduce the silver content needed for each cell, especially for the mainstream types. They're even exploring things like silver-coated copper pastes.
Using copper paste with maybe just 15% silver?
Something like that, yeah. Trying to cut down on the total silver while maintaining efficiency.
So wait, they're using less per panel, but the total amount needed keeps going up. How does that work?
It's purely down to the sheer volume. Despite the thrifting per unit, the absolute explosion in the number of solar panels being installed worldwide just keeps driving the total silver demand from the solar sector massively higher.
Ah, okay. The overall growth swamps the per unit savings.
Precisely. Solar remains the dominant growth driver for silver demand.
Got it. So, beyond solar, what are the other big industrial consumers?
Electric vehicles. EVs are another major growth area.
Right. How much more silver does an EV use compared to, say, my old petrol car?
Significantly more. A typical battery EV might use somewhere between, say, 25 and 50 grams of silver, whereas a conventional car uses maybe 15 to 28 grams, so potentially double, sometimes more.
And with EV sales booming globally, that adds up fast. Projections are around 20 million EVs sold in 2025.
Yeah, and that translates into substantial silver demand. Silver is needed in wiring, battery connections, power inverters, sensors, all the advanced electronics packed into EVs.
The Silver Institute was projecting automotive demand nearing 90 million ounces annually by 2025.
That's the kind of number we're seeing. It's a big piece of the puzzle.
Okay, what about AI? We hear so much about AI infrastructure build-out. Does silver play a role there?
It definitely does. AI runs on powerful semiconductors, and semiconductors need silver
Why silver specifically?
because of its incredibly high electrical conductivity and reliability. It's ideal for things like circuit boards, connectors, and components inside those powerful servers and GPUs used for AI training in data centers.
So the AI boom we're witnessing is directly fueling silver demand.
Correct. That sector's expansion was a key contributor to the record industrial demand we saw in 2024. And as AI continues to grow, expect robust demand for the chips and thus the silver inside them.
And then there's general electronics, 5G,
Yeah.
that provides a steady base demand too, right?
It does. Your phone, your computer, your TV, they all use silver. And the 5G network rollout specifically gave industrial demand a boost in recent years for components in base stations and devices.
The sources also mention some other areas like brazing alloys for cars and plain seeing growth.
Yes, and a general other industrial category also rose. Plus, silver nitrate, which is a processed form, goes into not just PV and electronics, but also things like petrochemical catalysts, mirrors, even some medical uses.
So putting it all together, the takeaway is that industrial demand is hitting record highs year after year.
Fourth consecutive record in 2024, yeah, over 680 million ounces. And it's really driven significantly by this green transition and AI.
Forecasts suggest it might stay flat or ease slightly in 2025 as maybe solar growth moderates a bit.
Possibly, but it's still a huge structural level of demand. That's the key point. It's not a temporary spike.
Okay, so that's the demand side. Booming, structural, driven by future-facing tech.
Let's flip to supply. Why is it so hard to meet this demand?
The supply side, it's a very different picture. Supply growth has been, well, pretty sluggish.
How sluggish?
Global mine production only went up about maybe 1% in 2024, reached around 820 million ounces. Forecasts for 2025 suggest a modest rise, maybe to 844 million ounces, which would be a 7-year high, but still.
Still slow growth compared to how fast demand is rising.
Exactly. And this brings us to a really critical point. The sources hammer home about how silver gets mined.
Right, the byproduct issue. Most silver isn't mined for silver itself.
That's the core constraint. Over 70% of the world's silver production comes as a byproduct when mining other metals.
Mainly lead and zinc.
Yeah, about 56% from lead zinc mines. And another 15% or so from gold mines. Only about 28%, less than a third, comes from mines where silver is actually the primary target. Okay, let me make sure I get this. Because it's mostly a byproduct, does that mean even if the silver price skyrockets, miners won't necessarily just go dig up more silver?
That's precisely the problem for supply responsiveness.
Their decision is tied more to the price and demand for zinc or lead or gold.
Exactly. Silver output is largely dictated by the economics and production plans for those host metals. If the zinc market is weak or a gold mine scales back, silver production falls too, regardless of what the silver price is doing. It puts a real damper on supply, reacting quickly to higher prices.
That makes total sense. It's a fundamental structural constraint. What about recycling? Can that fill the gap?
Recycling is increasing, which is good news. It hit a 12-year high in 2024, maybe 194 million ounces. Forecasts see it potentially breaking 200 million ounces in 2025.
Where's that coming from? Industrial scrap, old jewelry.
Both industrial scrap, like used catalysts, and also more jewelry and silverware recycling driven by higher prices.
But even at 200 million ounces, that's still only about 20% of total supply.
Yeah, it's a relatively small fraction. And the sources are pretty clear that recycling growth faces limits. It's complex, it can be costly.
And a lot of the silver is locked up in products.
Right. Think about all the silver in solar panels already installed, or in millions of smartphones. That silver isn't coming back into the supply chain for maybe decades until those products reach end of life and can actually be processed.
So recycling helps, But it's not a near-term game changer for the overall supply picture.
Not enough to fundamentally alter the balance right now, no.
Okay, so booming demand, constrained supply due to slow mine growth, the byproduct factor, limited recycling boost. What's the net result?
The result is what the reports consistently call a significant and persistent structural deficit in the silver market.
Meaning demand has outstripped new supply for quite some time.
Yes, the market's been in deficit, consuming more than it produces annually since 2019.
And 2024 was the fourth year in a row.
Yeah.
I saw deficit figures like 149 million ounces from the Silver Institute, but another source mentioned something even higher, over 260 million.
There are slight variations in estimates, but yes, either way, it's a very large annual shortfall, 4 years running.
And the cumulative gap over those 4 years, 2021 to 2024, was huge, something like 678 million ounces.
It's substantial. That's equivalent to, what, about 10 months of global mine supply in 2024, just disappearing into the deficit over those years.
Wow. And the forecasts say this deficit continues into 2025, making it 5 straight years.
That's the consensus forecast, yes. Maybe narrowing slightly, but still a deficit projected around 120 to 150 million ounces for 2025. It remains very large.
So if supply isn't keeping up year after year, where is the extra silver actually coming from to meet the demand?
It has to come from somewhere. It's being drawn down from existing above-ground stockpiles.
You mean the inventories held in vaults, like in London or New York?
Exactly. The metal held in LBMA vaults, COMEX warehouses, and other reported inventories. That's where the shortfall is being made up.
Are there other supply challenges mentioned? Things making mining harder?
Yeah, the usual suspects for miners. Rising energy costs, shortages of skilled labor, some existing mines operating near full capacity.
And finding new mines isn't easy.
No, the sources talk about a thinning pipeline of new projects. Discovering and developing major new silver deposits is becoming increasingly difficult, costly, and takes a long time due to permitting and environmental regulations.
And geopolitics must play a role, with production so concentrated.
Absolutely. Over half the world's mine supply comes from Latin America, Mexico, Peru, Chile, Bolivia primarily.
So any issues there, new mining taxes, permit delays, strikes, social unrest?
Could significantly disrupt global supply. China's also a major producer, so any slowdowns there matter. And the sources even mentioned potential trade issues, like talk of U.S. tariffs on Mexico adding uncertainty to supply chains.
Okay, so summing up, soaring demand from green tech and AI, meeting a supply side that's really struggling due to its byproduct nature, slow growth, recycling limits, and other challenges. What has this fundamental imbalance done to prices?
Well, it brings us right back to where we started. The price action clearly reflects this dynamic. Strong upward momentum over the last year or two.
Yeah, after being stuck below $25 an ounce for much of 2023, prices really broke out. The average price in 2024 jumped 21% to over $28.
And the rally just kept going into 2025, up another 15.5% in Q1 alone.
Then hitting $32 in May, near 11-year highs, and then that surge past $35 by early June, hitting over $35.80, the highest in over 13 years.
An impressive run. That's nearly a 25% gain just year-to-date as of early June.
And the sources seem to agree that the main driver is this combination of strong industrial demand and the persistent supply deficit.
Yes, that's identified as the core fundamental reason for the rally strength.
Are other factors helping push prices up too? Macroeconomic stuff.
Definitely. The macro environment has become quite supportive as well. A big one is the expectation that the U.S. Federal Reserve will start cutting interest rates later in 2025.
How does that help with silver?
Lower interest rates usually mean lower real interest rates minus inflation. That reduces the opportunity cost of holding non-yielding assets like silver or gold, making them more attractive compared to bonds that would then pay less.
And silver's traditional roles: inflation hedge, safe haven.
Those are playing a part too. Moderate inflation keeps its hedging appeal relevant. And ongoing geopolitical tensions, global uncertainty, that tends to drive some safe haven buying. People look to diversify away from stocks or bonds into real assets.
Plus, a weaker U.S. dollar, if rate cuts happen, could also help.
Potentially, yeah. Since silver is priced globally in dollars, a weaker dollar generally makes it cheaper for buyers using other currencies, which can boost demand.
That point about drawing down the physical stockpiles seems really crucial evidence of this tightness.
It absolutely is. It shows the deficit isn't just on paper, it's physically happening. Reports show LBMA London vault stocks dropped sharply, like 14%, just in Q1 2025.
And COMEX stocks in the U.S. are down too.
Down significantly from mid-2024 and considered pretty low relative to the scale of annual demand. The metal is literally leaving the warehouses to meet consumption needs.
Hundreds of millions of ounces drawn down over the last few years from these visible inventories.
Yes, the numbers align well with the cumulative deficits reported. It's tangible proof of the market imbalance.
What about investment demand? How have investors reacted?
It's been a bit of a mixed bag, actually. Retail buying of physical coins and bars was reportedly quite weak in the West during 2023 and early 2024.
Really? Despite the deficits.
Yeah, although India apparently saw a big surge in physical buying. But on the other hand, silver-backed ETFs saw a significant turnaround.
Exchange-traded funds.
Right. After seeing money flow out in 2023, they saw strong inflows in late 2024 and early 2025. That suggests maybe institutional investors were starting to wake up to the story.
Institutions getting interested again.
It seems so. Now, some reports did note that overall, fund managers' positions in futures markets and total ETF holdings were still maybe below historical averages earlier in 2025, suggesting some caution lingered.
But others pointed to specific funds buying physical metal.
Exactly. Like the Sprott Physical Silver Trust, PSLV, adding over 10 million ounces in 2025. That signals a move towards wanting the actual tangible metal, which is quite bullish.
So given all this, the demand, the supply constraints, the deficits, the price action, what are analysts forecasting for silver prices going forward?
Well, based on the expectation that these fundamental dynamics will continue, the forecasts cited in the reports are generally bullish.
Higher prices still expected.
Yes, some longer-term forecasts mention figures like $40 or even $50 an ounce. Shorter-term targets for 2025 are cited in the $38 to $45 range.
Okay, so the overall picture seems strongly bullish. But surely there are risks, potential headwinds the sources mentioned that could derail this.
Oh, absolutely. No market goes up in a straight line. The reports definitely highlight potential risk.
Like what? Monetary policy.
Yeah, if the U.S. Fed stays tighter for longer than expected, keeping interest rates high and the dollar strong, that increases the opportunity cost of holding silver and could be a drag.
And the economy. What if there's a global slowdown?
That's a major one. A significant economic slowdown, especially in big consumers like China or Europe, would almost certainly dampen industrial demand.
And a U.S. recession specifically.
That's noted as a particular risk. Because silver is so heavily tied to industrial activity, it might actually underperform gold in a recession scenario, as gold tends to act more purely as a safe haven then.
What about those other factors like thrifting in solar or new technologies or better recycling? Could those eventually reduce the need for newly mined silver?
It's possible, in theory, but the sources seem to suggest that significant technological substitution, replacing silver in electronics or solar, is pretty limited in the near term.
Why?
Performance, mostly. Silver's conductivity and reliability are just hard to beat for many key applications without sacrificing efficiency or durability. So a major shift away from silver seems unlikely soon.
And recycling, while improving, still faces those challenges.
Right. Cost, complexity, and the fact that so much silver is locked up in products for decades. It helps on the margins, but it's unlikely to solve the structural deficit anytime soon.
So those potential offsets aren't seen as major threats right now.
Not enough to counteract the massive underlying demand growth from green tech and AI. The scale of that growth seems likely to overwhelm efficiency gains and recycling increases for the foreseeable future.
And that point about investor positioning being maybe still a bit cautious.
Yeah, if large investors like fund managers don't fully jump on board, it could limit how high prices go purely from speculative buying. But
the fundamental driver remains.
exactly. That persistent supply deficit, projected now for a fifth year, provides a very strong underlying support for prices. Plus, you still have the long-term demand locked in by green energy.
And the safe haven appeal from geopolitical risks.
Right. Those factors can help mitigate some of the potential negative impacts from, say, an economic slowdown.
This whole discussion about tight supply and falling inventories really begs the question. Are we actually, running out of silver?
It's the elephant in the room, isn't it? And the answer depends on what you mean by running out.
Okay.
If you look at the visible above-ground stocks, the metal readily available in exchange vaults, the picture does look, well, concerningly tight. As we said, inventories have fallen significantly, multi-year lows.
Drawn down by hundreds of millions of ounces to cover the deficit.
Exactly. Some estimates suggest that at current demand levels, these visible supplies might only cover a few months of demand if the drawdown continues like this. That definitely increases the risk of market squeezes or supply shocks.
But what about the silver still in the ground? The reserves?
Okay. Looking below ground, the geological picture is different. Known silver reserves, what's thought to be economically mineable with today's tech, are actually quite large.
How large?
The U.S. Geological Survey estimated something like 17.7 billion troy ounces back in late 2022. At current mining rates, that's enough for 20 years or more. And if you include less certain resources, it extends further.
So the planet isn't running out of silver or anytime soon, in the medium term at least.
Correct. The key risk isn't geological depletion in the next decade or two. It's the industry's ability to consistently mine and process enough silver year after year under current economic conditions.
Dealing with costs, regulations, geopolitics.
And especially that fundamental constraint that most silver production is tied to the fate of other metals. That's the real bottleneck.
That's a really important distinction. Okay, now for you listening, maybe following this market, maybe even thinking about investing, the sources also touch briefly on the difference between owning physical silver versus paper silver.
Yeah, it's a practical point worth understanding. Physical silver, actual bars, coins, means you own the metal directly.
Tangible asset in your hand or stored securely.
Right. No counterparty risk, nobody owes it to you. Potential privacy benefits, intrinsic value.
Yeah.
But it has downsides.
Right.
You need to store it safely, maybe insure it. It can be less liquid, harder to sell instantly at a good price compared to financial assets. And you pay dealer markups or premiums over the spot price, which can get quite high when demand surges.
And paper silver, what does that mean?
That usually refers to things like silver futures contracts traded on exchanges or shares in silver-backed exchange-traded funds like the big one, SLV.
What are the advantages there?
High liquidity, easy to buy and sell quickly during market hours.
Well,
You can get exposure with smaller amounts of capital or even use leverage with futures. Transaction costs are generally low and there's no storage hassle for you personally.
but there are different risks, right?
Yes, you have counterparty risk. You're relying on the exchange, the broker, or the ETF provider. There's also basis risk, the chance the price of the paper asset might disconnect slightly from the physical spot price, especially in very stressed markets.
And even with ETFs that hold physical silver, getting your hands on the actual bars might be difficult or impossible for individual investors.
Generally, yes. They're designed for price exposure, not physical delivery for most shareholders. And paper assets can sometimes be more influenced by short-term speculation compared to the underlying physical market.
So different tools for different needs.
Mm.
Physical offers tangibility but less convenience. Paper offers convenience but carries financial risks.
Exactly. And being aware that physical silver can become scarce and trade at significant premiums during crises is important, contrasting with the liquidity but also the potential complexities of paper markets in those same extreme situations. Many diversified investors end up holding a mix.
Okay, let's try to wrap this up. Bringing it all together, the sources we reviewed paint a really clear picture of silver's evolving identity. It's not primarily just a precious metal anymore in terms of market drivers.
No, its role as an increasingly vital industrial commodity is really taking center stage.
Its essential function in enabling the green energy transition, solar, EVs, and powering future tech like AI and 5G that's creating incredibly strong structural demand.
And that demand looks pretty robust, even accounting for potential economic headwinds or efforts towards thrifting.
Meanwhile, the supply side is facing these significant, almost baked-in constraints. It's hampered by that byproduct status, limited near-term boosts from recycling, and challenges in bringing new mines online quickly.
And that fundamental imbalance, this booming demand crashing against constrained supply, is the direct cause of these persistent large market deficits we've seen year after year.
Which, in turn, are drawing down those global physical stockpiles and providing the key fundamental force behind silver's powerful price surge to multi-year, even decade-plus highs.
That's the core narrative emerging from the sources.
And for you listening, this really highlights how the basic materials needed to build our technological future are facing real pressures. This isn't just abstract economics. It could affect supply chains, the cost of clean energy, maybe even the speed at which some of these crucial technologies can be deployed globally.
So we've taken a deep dive here into these core dynamics. Essential industrial demand hitting a wall of constrained supply, leading to deficits, falling inventories, and rising prices.
Right. So here's a thought to leave you with, something to mull over based on everything we've discussed. Given how truly indispensable silver seems to be for solar panels, for EVs, for the very infrastructure needed for AI, and knowing how structurally difficult it is to just ramp up supply quickly, well, how sustainable is the growth path for these critical technologies if this key ingredient remains so tight?
That's the big question, isn't it? Could this bottleneck force an even more intense search for truly viable silver substitutes? Or will the market simply require significantly higher prices, maybe those $40, $50 levels, to finally balance the equation by choking off some demand and strongly incentivizing more mining and recycling?
What stands out most to you from this deep dive? Something to think about.